Welcome back, Fundamental Academy, and I'm super proud to say that the team has been growing rapidly. If you guys want to get in touch with me, I will leave a link in the description below to my email address, and you can email me if you want to become a student or looking for some mentorship. So, yeah, let's not waste any time. Let's jump straight into this video. In this video, I'll be showing you guys how to use the Fibonacci. So, first things first is the Fibonacci is a price action tool, and I believe technical traders and fundamental traders use this tool. So I just used some blank space I found on GBP/JPY, which is British Pound Japanese Yen, and I'm on the 4 hour. So let's jump into it. So firstly, you can use the Fibonacci on any time frame. That's rule number one, right? Rule number two is you need to know what the Fibonacci retracement is, right? So in order to draw this tool, you click on your Fibonacci, you click, and you drag it up or down, right? That is how you use the Fibonacci tool, and then you click again, left click, and then you place your Fibonacci tool, right? So the first thing I want you guys to see is I drew in these different arrows which are different colors, and according to my mentor, these are what these levels mean, right? And this, once again, guys, is various different Fibonacci rules, but this is just what my mentor taught me. So 78.6, according to my mentor, is the safest area to take a trade off. I'll show you guys why later. 61.8 is a golden area. It's a golden area because traders believe more than likely when price is in a trending market, it will hit the 61.8. Then we get 50%, which people don't talk much about. I personally believe that is part of the golden area as well. And then 38.2, which is the aggressive level. So traders believe once that level is reached and it is rejected and respected, price will jump off that area and you could take profit within seconds, minutes, or a few hours. So that is a very aggressive level. The other thing that forex gurus and mentors don't tell you is we were taught that 0%, minus 27, and minus 61.8, that these levels, right, are your take profit areas. So if you're on the 78.6, you're going to target these take profit areas above here, right? If you're on the 61, these areas above here, they still count. But in reality, that doesn't make sense to me because that's quite a long trade to hold, and that's a lot of risk, and there's scalpers in the market, and there's traders that take very long positions, right? So I believe the market's got to accommodate everybody, so I don't believe in trading that way. So the thing that they don't tell you is that all these level or take profit areas, guys. For instance, if I take a trade of the 61, let me explain this, and it should be easy to catch. If I take a trade of the 78.6, right, and this is support, 61.8 could act as resistance. So what I could see price do is price could do the following, right? So price could come down to the 78, reject that area, hit the 61.8, and then head back down. So that's what I believe price could, or that's what I'm saying what price could do. So what I want you guys to know is that these areas, I believe that they take profit areas as well. So if you take a trade on the 78.6, you can take profit at 61.8, 50, 38.2. If you're ambitious, you can target 0 and much higher above. But I believe these areas are take profit areas as well that we can use, and they are respected in the market. So that is it. That is what the Fibonacci is. Those are the levels that my mentor taught me. And remember, they take profit areas, and this is a price action tool. So that brings me to the second part of what I'm about to teach you guys in Fibonacci. The three rules in the second part that I want to explain is they don't tell you this on YouTube, they don't tell you this on Instagram, and they definitely don't tell you this in their courses. But the Fibonacci is you use the Fibonacci in a trending market, meaning you can't draw Fibonacci to the upside. If you're drawing the Fibonacci to the upside, it means you're looking for buys. So why in a downtrend would you draw the Fibonacci to the upside? The Fibonacci is a continuation pattern tool. So in an uptrend, you draw your Fibonacci to the upside looking for buys, and in a downtrend, you're going to look for sells, right? So in this case, I just took some lines and I drew these tools up, or I draw these patterns, and we can clearly see this is a bullish trend, right? So the first thing I told you guys is you need to draw it in a trending market. And the second thing I'm going to teach you guys is if you line your Fibonacci levels up with support and resistance, right? And you use a trend line, right? Which is the third rule. Your trades will become more profitable and you have a higher probability of winning your trades. So let me explain that. So let's say there's an uptrend and I want to take my Fibonacci. So I place my tool at the bottom where the uptrend begins, and I take it to the top where the uptrend ends, and then this is what we call a pullback, right? So now what I can see, I'm just going to extend this Fibonacci so that we can see the levels clearly to the up. And this is all hypothetical levels once again, guys. We can see here price comes up and it hits 78.6 and it rejects that area and it goes up all the way to take profit 2, right? Which is minus 61.8. I'm going to delete my Fibonacci and I'm going to draw it again in the next uptrend. I take it from the bottom, I take it to the top, right, of my uptrend. And in this case, we had price hit 61.8. Now let me explain to you guys why 78.6 is the safest according to my mentor. If I took a long position, right, of 61.8, the proper way to trade Forex would be to put your stop loss below 100%, because that is the only way that you know this trade is going against you, because that means structure is broken. So what is structure? If this is a bullish structure, the last structure you're going to look at is the previous higher low, right, which indicates it's sell bullish. So if price had to come down to this level here, let's say price did this, instead of that, price went down here and it broke this little support where we had 144.500. That would mean the structure is broken because my previous higher low was broken, right? And it didn't hold the bullish structure. So that's the only way you would have known the trade went against you. But look how big the stop loss is. That's 167 pips, right? But now let me show you something else. If we took this trade here, right? So from the bottom of the uptrend to the top of the uptrend, and it hit 78.6, right? And I took this long position off here, and I put my stop loss below the 100, that would have been a stop loss which is a third of the previous stop loss, right? Which is 57.8 pips in this case. So that is why 78.6 is seen as a safe level to trade off. So what I want you guys to see is, just to get back to rule number 1 and rule number 2, you guys need to notice, and sorry guys, I'm still working on the quality of my YouTube videos in terms of like putting up slides and that. I'm quite new to YouTube, so if you guys have any suggestions, please do comment below and I'll definitely upgrade. So when you're drawing your Fibonacci, firstly, remember uptrend, you draw it to the upside. And like I said, these two patterns I drew here, what I want to show you guys is if you line up your Fibonacci rejection levels with support and resistance, in this case support because it's a bullish structure, and a trend line, normally there would be the perfect place to take your trades off, and that will obviously make your trades, give it a higher probability of winning because it's most likely to turn around at those points. So that is it on how to use the Fibonacci. I think I covered most of what I wanted to cover in this video. Guys, just remember, if price hits the trend line and the support areas or your Fibonacci levels, you're going to look for rejection candles, right? And that is to the up or the downside. So let me show you the live markets how to use the Fibonacci. I'm going to refresh my charts. That's my current analysis, my analysis on GBP JPY. So if you are watching this video, you caught a signal. I did buy this pair up to 154.500. It didn't hit my take profit. We were about, let's see how many pips I was away from take profit. This is quite frustrating. We're 4.3 pips away from take profit. But yeah, it was a good trade. And wait, this is wrong. This is sellers targets. Good thing. Coming back to it, sellers targets all below. All right. So I'm going to go into the past. And guys, the other thing I want to teach you guys in Fibonacci is that you can use it on any time frame. I prefer using it on the 4-hour and lower, in special cases on the daily, but I wouldn't use it on the weekly and the monthly because you just wait favor for a trade. So here we can see we've got a clear uptrend in GBP JPY. So firstly, guys, the first thing you got to tell yourself is, why am I looking for sells if the market is clearly bullish? All right. So normally before I use my Fibonacci, I could try and identify trend lines. Right, let's go back there. In this case, it's very hard for me to draw a trend line, so what I'll do is I'll go draw in value areas which I can clearly see. And I'm actually a bit sad that I can't use this in the live market because that would be much better, but at this moment the only thing to do and teach you guys is by looking into past price action. So I'm going to use value areas to explain to you guys. This is basically support we have here. I'm going to change its template to 1-hour value area. That's support. We have support over here. Let's see what else is there. Hopefully we're lucky. I think that's quite enough for the video. And let's draw Fibonacci. Right. So look at this live market. this right there. So firstly, what you guys are going to see is, and doesn't look like the beautiful lines that drew up here, right? That is quite easy to draw Fibonacci, and if trading was with these lines, it would be very easy to trade. But in this case, it's not. So I'm going to take the easiest one. I'm going to tell you guys to try and draw the Fib on where I currently have price. Pause. So I'm going to give you 5 seconds. 5, 4, 3, 2, 1. Because you're my students, I'm going quite quick. You guys should be good. For this trade, normally the rule is you can take a Fibonacci from wick to wick or from body to body. I take it from wick to wick. So where this uptrend begins, take it up, and you have rejection, right? That is where the uptrend ends and it comes back. Now see what price does. After I get the rejection at this level, right, because that's where my uptrend ends, it hits 38.2. I get a rejection candle, and within a space of, what was the date here? It was the 9th, and the 12th. In 3 days, we hit take profit 1, 2, and 3, right? And let's see how many pips that was from the 38. That was 200 pips on GBP JPY. So here we can see that my Fibonacci lined up perfectly with my support area, right? And the support area lined up with my 38.2. So that is a good probability trade, guys, and especially because it's in an uptrend, right? Now the second trade I want you guys to look at is in the same vicinity, right? I want you guys to draw your Fib and tell me what you think. So I believe, so if I draw from there to there, right? Okay, so the uptrend begins over here, I believe, right? I'm gonna draw this level, move it to the left. This is where the uptrend begins. So take it from wick all the way to the top where I get rejection, right? Which is around 143,920. Price comes down to this value area, right? It lines up with my value area and my 38.2 aggressive level, and literally within one day I hit take profit 1 or take profit 2, and I made how many pips? I bagged 180 pips in the market, guys. Now, I can't explain to you guys in a simpler way how easy Fibonacci is. Let me actually try to identify a trend line if I could. Um, I'm hoping I can. Let's see what we can find. Let's see what we can find. Traders, please be an area. Please be a trend line. Trend line. Ah, I'm gonna give up, guys. I'm not gonna waste any time and make this video any longer. I think that is it from my side. If you can't remember what I just said, replay this video as much as you can. Pause the video, try and take in what I said. I know I speak quite fast, but I hope you guys enjoyed that video. Like, comment, subscribe, and turn on those notifications so that you can get notified when I post new content on how to trade Forex, as well as my weekly signals that I send on currencies. I will be launching some weekly signals on synthetic indices and American indices as well, which I'm super excited for. So Fundamental Academy, I hope you guys enjoyed that video, and I'll see you guys in the next.